BYDFi is a crypto exchange on desktop and mobile where you can spot trade, futures trade, use leverage tokens, and copy the trades of top traders. If you sign up with the link in the description, you get a free $100 when you deposit $100. There's hundreds of crypto available on their spot exchange, as well as a free test account so you can practice futures trading without getting wrecked. BYDFi.
Hello everybody, welcome back. Let's get straight into it, shall we? Because as far as traditional markets, very much the same as yesterday, the day before that, week before that, maybe in a minute. Basically all still pointing up, surprisingly, even at these higher prices. I mean, the euro, for instance, here is effectively building a base above the top of the resistance. So we're talking above 112, so good luck. I mean, I wouldn't fancy buying it up here, but it's still relatively strong. Definitely is still relatively strong, to be fair. Let's take it to a daily, see if there's any weakening momentum. There isn't. It is looking a little peaky, I should say, but that's only based on the money flow index. There is no bearish divergence taking place on this chart on the daily here. So recognizing that the peakiness, the peaky behavior, is something that we should sort of respect. Previous peaks on the money flow index have resulted in quite nasty pullbacks back down to the 200 exponential, but outside of that, quite happy with the way that looks. And so that's likely to cause the dollar index, obviously our favorite Dixie, to stay low and possibly even go lower. I mean, we've broken the support here, and the support is now getting broken by the 10 exponential, so that's only going to make it harder for it to be reclaimed. 4 hourly, what we got going on the 4 hourly? Really nothing. No bullish divergence, no nothing really like that. I mean, it's a little bit, but not really. And if we just take it back to our weekly, we can just basically see the overall trend in this giant rising channel, effectively, with a view to come down to the sort of the mid to low 90s over the next year or so, and that could happen at any point. Now we are hitting this 200 exponential moving average, and that's something that we have to respect, because this would be effectively a golden cross retest. Now, if we just backdate this 200 simple versus the 200 exponential, so exponential being white, simple being yellow, let's just have a look at any kind of prior support stroke resistance relevance. So the previous time we had a major golden cross over here and a rally, and we did have a significant pullback, it was the simple moving average that tagged it before your classic move up. So basically a golden cross retest and a bounce and a V-shaped recovery and beyond. So it's the simple that did it there. Exponential had the resistance here, nothing really of any significance around these levels, and since we've been in this channel since 2009, I'll probably put more weight on the simple moving average than the exponential. However, neither of them have been that particularly amazing, so it's anecdotal if anything. But if we were to find a bounce, on a weekly, between here and here is likely to be the place to do it. And look, it's not. Yeah, it's nothing other than anecdotal. It's still a bullish chart while being above these areas, but I don't see any reason for it to pick up. And again, on a fundamental basis, being central banks situations, Fed pausing or at least raising rates at a lower, like 0.25 potentially, versus all the others going for a 0.5. There's no reason for this to move yet, and I don't see any talks of ECB or Bank of England, Bank of Japan, anybody else pausing or doing that. They still basically have their projection of doing 0.5 basis points each time, and all those other currencies look quite strong on their on their own merit. So euro, this is a pound to the euro, not that it means a great deal. On a weekly, broken out. Euro again on the weekly, broken out. It's all looking quite good. So anyway, I've bored you to death with the forex side of things, and there's not a great deal of point talking about Bitcoin either, because it's exactly the same as yesterday. We're here on the 4 hourly. We'll be looking for a move down to, at this point now, 29,700, as the moving averages have moved up higher than they were yesterday. We've already seen a retest of these lower zones and a decent bounce. So this is the area to hold, basically, 29,700. That's basically it. And Ethereum, 1864.
But we're here to talk about XRP because that's all we really want to know about right now, because it's the one that did the big bold move. If there's going to be anything happen in the markets, perhaps with altcoins, all eyes are on this one. We're trading very high volume. This is probably the highest volume I've seen for XRP, really. It's half a billion. Half a billion in 24-hour trading volume. Right, so focusing on the 4 hourly to begin with, we have consolidated. It looks like a bull flag, to be honest with you. We're above the Bollinger Band Center and the 21 exponential, being around 72.5 cents. We're still way in the middle of this effectively resistance zone, the sell zone. We've been talking for a long time now about how XRP likes to do this sort of behavior. We got the initial move, big move up, consolidated, fannied around. We're saying, look, it's the next move is going to take us between 60 and 90, and certainly did that. So all of those sell orders were filled. They're all, that's it. So that move was done. And if we were looking to enter into XRP, if no one's ever done it before, I would probably say hold off generally, because the rule for XRP, as it always has been, is that it likes to, whether you're bullish or bearish, revisit that 200 exponential, and that's where normally the big moves take place. So the big move up, we did consolidate, but more or less held between the simple and the exponential on the daily, and that's where we got the launch pad from all the way up. And again, I'm not saying that the TA said we're going to move up to 90 in a day. That was the SEC situation that did that. But, you know, at least we can see that, and this is the good thing about XRP, at least we can see that the TA gives us appropriate areas to buy and sell from, with or without, you know, the fundamentals of any kind of court case ruling or the FUD of that or whatever. So there is still use and method to the TA, right? So we've got that. And so, like, if I was to buy this, if I had no XRP and I wanted to buy XRP, given the fact that we are still, from the last retest of the 200 exponential to where we're at right now, we're still 61% up from that bid where you could have bought it from, I would say hold off, because look, this can, the market can drop, the market can pump. This could just go sideways now, like it generally does. We go up, big move up. Everyone says, well, where should I buy XRP? I've recognized now that it's something I should have bought before the move, but now it's gone up. Where should I buy it now? So, well, to be fair, if you really wanted to limit your risk, you just wouldn't buy it. Basically, you buy it when no one else wants it, and when it's settling at an area of its own, well, on its own merit, and that is usually a 200 exponential on a daily, and we are, like I say, about 60% away from that right now. It wouldn't make sense to buy it. Let's take it right down to a short-term time frames, where we can see the Bollinger Bands on this 1 hourly are pinching so tight you can just about squeeze a Rizzler paper between them. We've got a 3% gap basically from the bottom to the top. We don't have any short signals at the moment on this one, but we would if we were to drop down throughout the rest of the day below 72. So we want to hold 72 cents for XRP in order to get immediate continuation of some form, and that 72 is basically also your 21 exponential moving average. On your 4 hourly, and the 4 hourly is still relatively okay, provided being above those levels. So the 1 hourly, the 4 hourly, 72 cents is the place to be. Closures below there, even on a 1 hourly, will initiate a sell signal, and we'll be looking to see ourselves drop probably down, I would say, to around 65, 66 cents, give or take, roughly around those areas. But really, we should just respect that. It's moved and it's done very well for itself, and it more or less, with or without the SEC, is behaving the same way as it always does. This is the end of the last bear market for XRP. Recognize that this is not the last bear market. The bear market for crypto ended around about this area for all crypto, but XRP still wanted to consolidate. This is what it did in the previous cycle prior to this one. Then you break out, you have a big move up, kapow, consolidate, another big move up, kapow, and then obviously the SEC messed it up. So look, it's exactly the same in its behavior. Breakout, kapow, consolidate, big move up, kapow. And so I'll be looking for this to make new highs, and higher lows on a weekly, with or without the rest of the market, basically. But as it stands right now, if you don't own any of this and you're looking to go in it, you know, for some kind of short-term trade, you do have to be careful around that 72 cent zone. personally, like I've always had lots of XRP. You know, it's always been a good chart to trade. In the last bull market, I traded tons of it on Bybit and Bityard, doing coin futures. So I accumulated way too much of it, and I'm just happy to hold on to it really for it to make a new all-time high, which I'm pretty sure it will, over maybe even over the space of this year, but certainly over the next few years, and then yeah, I'll probably part with at least half of that for good. But for now, look, it's it doesn't really know what it wants to do, and that's the main thing, because the rest of the market, including Bitcoin, is still looking to find support at these lower zones. And I would probably say that we're more likely to bounce around this 29,700 than break down from it. But there is absolutely no guarantees on that one. So either way, standing back, admiring the show, XRP is good, but Bitcoin and Ethereum still need to move themselves up to and above their previous local highs, which for Bitcoin is 32,000, for Ethereum it's 2,000. Building bases above there will have continuation, and you'll likely see continuation for all altcoins of significance, including XRP and all the other ones. But until that, we're effectively still range bound in these markets, and it's only the fact that traditional markets like Forex, S&P, Nasdaq, general stocks, and even gold all look like they want to move up and break out and continue with their uptrend, even if it's just to revisit their most recent highs. Something like gold, for instance, back up to 2,000 and maybe a little higher. That all looks relatively likely, and so with that, I still have a bullish bias on crypto. However, traditional markets are basically the better place to be, and they have been for at least the last month or two, as crypto's been going sideways. But sometimes sideways is good because it allows an accumulation range, which I think that effectively we should all be thinking of accumulating. Bitcoin, Ethereum, generally crypto overall, dollar cost averaging on the way down. I think that is the best thing you can do over the space of, well, at least this year, for a longer term I suppose position, to build up a portfolio of things that have value or things that have a higher degree of success. Not any old altcoin, but feel free to buy whatever it is that you want. But I think now is as good a time as any to start that dollar cost averaging into crypto, because it's basically sideways, isn't it really? And with any move down, it gives you more opportunity to buy at lower prices. Just be prepared for the volatility, which is what crypto's famous for. If you want to get a 10x, be prepared to see yourself go 50% down. That is still an epic risk to reward ratio. That's what it is. Some people can't handle that kind of thing, but that's basically what it is. 50% down versus 1,000% up. That is awesome risk to reward, but you've got to be prepared to see yourself go 50% down before you see yourself go 1,000% up. To recognize that is crypto for you. That's why we like it. Just some people just cannot handle the fact that they're down in their investments before they go up. Trust in the cycle. Anyway, I'll leave it with you there. Hopefully that has been in some way useful for you. If it's not, I apologize. If you want to join me on the live stream tonight, you've got to be a Patreon member. There's links in the description below. Otherwise, I hope you have a nice day and take it easy.